All right. Hey there. What's going on, everybody? It is, what time is it? It's just after 11 a.m. Central Standard Time here on Friday, the 22nd of November, our last Friday before Thanksgiving, 2024. Glad to have you guys joining with me. As always, coming at y'all live here from just north of Houston, Texas. It's a bit cool out here. we haven't had the cool for a while. It's actually still been kind of weird, warm, over here, but nonetheless, here we are, and here you are, and it's good to see you guys here. I see JoJo there. What's up? Data, Andrew, Scott, Ash, Diego. Good to see you. Yeah, man. Scott's asking about my eyes. When you get old, as somebody who never had to worry about glasses, growing up, these last few years have been tough, and I end up losing glasses left and right because I get so used to not wearing them, and then my eyes go bad with the allergies. And so last night it was kind of tough doing the updates at the end of the day around 9 or 10 o'clock last night for our members. So yeah, just to give you all that don't know, that aren't in there, a little background of what Scott was asking there. What's going on, Bernardo? I see you, buddy. So we're going to talk today, guys. We're going to focus a bit on MicroStrategy. We're going to talk, of course, about Bitcoin and maybe a few other things. Right? We'll kind of talk about that. I think I'll probably shut it down around noon or so and jump on over to Gary Cardone's show. See if we can jump on there a little bit and give a little information and talk about what I'm seeing in the charts there as well, answer some of his questions. So, if you guys want to follow me over there afterward, you can do that. But hey, listen, before we get going here, hit the thumbs up, hit the like, subscribe, follow, all those great things. Leave a comment. Sometimes it takes me a little bit to get back to the comments, but I do a pretty good job of getting back to everybody on those there. And so how are y'all doing? Y'all doing all right with this little rally? In case you haven't heard, which you might have been sleeping under a rock if you hadn't, right? But Bitcoin, the futures, the CME futures actually hit 100,000 early this morning. Let me kind of get myself set up here a little bit better. And we'll do that. So if we're looking here at this, crush over here, you can see if you look up here at the high, $100,005. They said, hey, you got 100,000, we'll see you 5. And so we actually hit that on the futures. We haven't hit it on spot Bitcoin yet. Okay. Steven, what's up? He says XRP is finally on the way up, man. It just hit our wave 3 target, a little bit earlier today. So yeah, we'll see how this goes. Frank, Scott, good to see you guys here. Of course. And Steven, from Yorkshire, UK, it looks like. Glad to have you checking in here. Ash is saying he exited 80% of his Bitcoin position at 98,000, looking for hopefully a pullback. Yeah, I don't know. Again, this is, if you guys are in or had been in our, in group coaching or whatever with us here, since back here in September, I mentioned that most likely you shouldn't be trying to time all these tops and bottoms along the way. Most likely you should at least have a bag you just kind of let sit there and you don't trade in and out. You just let it run, because once, we were doing all this overlapping price action, and I was expecting it because of this low here to head up and break out. And that way we wouldn't have to get caught, does it hit up here and pull back, or does it just pull back a bit, or does it blast through, all those funny things. So, I kind of warned about that back over here in September. We do get this rally up. So, the question now is, do we kind of break out, above that 100,000, come back, retest it as support, and then continue up higher? Or do we get rejected around it? And that's kind of the interesting way to look at it, right? I know a lot of times you guys, you want to get on here and, people like myself and others out there, you want some real, strong, oh yeah, it's definitely going to do this or that. I think the best way to approach that is to not look for that. Okay. And what do I mean? Because there are no guarantees in trading, other than you're going to lose money from time to time. And the newer you are, the more money you're going to lose, and the more often you're going to lose it, because you're just learning. And usually at the beginning, you have no idea what good, proper risk management is. And even when you find out, you're hesitant to use it often because, oh my God, it means you can't make $1 million from $100 overnight, right? And these are things I went through when I first started as well, about 30 years ago, which is why I can so kind of, grin and laugh when I say those things, because I remember having those same feelings and those same thoughts. But when you're online, the last thing you want to do with anything, really, but especially with markets, is to get all caught up in somebody who guarantees price is going to do this or that, right? Because they don't know. They're going to get lucky, right? It's a guess. Now some of them are a little bit more measured guesses, a little bit more experienced guesses than others. But at the end of the day, it's really what we're doing, guys. We're kind of guessing at what price is going to do, right? So I don't have an idea, a personal idea of whether we get rejected 100K or we blast through it. But I can say usually what happens, and when I say 100K, it could be, $1,000, $2,000 above, just kind of into that area, right? A few percentage points around, the 100,000. But we can get up into there, get rejected, and come back, and then we'd be looking at 90,000 or 80,000 potentially on a pullback like that before we get a real push through and breakout through it, right? But again, the other idea is, listen, there are people waiting to buy at 100,000. And we've had this setup here over the last couple of weeks with all the inflows into the ETFs. We had MicroStrategy just completed another $3 billion offering. 0% convertible notes, guys, due 2029, I believe. I just shared today. There's a lot of news going on today, right? So let me see here. SEC Commissioner Jaime Lizarraga, I can't even say his name correctly, is going to step down on January 17th. He voted against the Bitcoin ETFs. We know that Gensler is going to step down on the 20th, Trump's inauguration day. So we've got that going on. What else do we have? We've got, let me see here. Well, the one bad thing we have is Kramer just says, all I can tell you is own Bitcoin. That's a winner. That's why we can't have nice things. He's got to open his mouth when price is doing something nice, right? In case you don't know, usually when he says something positive about Bitcoin, we do some kind of pullback. And usually that happens when Saylor, completes these sales as well. So we've got both those things kind of hitting. But what else do we have here? We have the CBOE is going to launch the first cash settled options product related to spot Bitcoin. And that's going to start Monday, December 2nd, according to Reuters. Okay. What else do we have here? The big German insurance company, Allianz, right? We found out that they were one of the big buyers of Saylor's notes there that he was selling up for MicroStrategy. 24.75% of the 2031 convertible note was bought by Allianz. Now, if you don't understand, I believe that, insurance getting involved in crypto is a huge thing, right? Because insurance companies are notoriously risk adverse. They have to be, right? They have to make money, but they also have to be able to pay out, all these claims that come out. So I think it's a huge thing that we get such a large insurance company coming in and buying up either Bitcoin or, this is the same thing basically as buying Bitcoin here, right? This is the idea, is buying those notes for MicroStrategy. It's huge, I think, anyway. So, we have that. Then we had New Market Capital CEO was on a CNBC there. And again, I reposted all this on X, on my feed there. But he was explaining how Bitcoin-backed loans reduce the company's risk. And so, again, you have all this kind of positive stuff coming in here, right? And what are you going to do? It's hard to be really bearish on that. Now, that doesn't mean a pullback, right? Again, people want to say bearish, right? So when I talk about bearishness, if I'm looking at this, I don't consider this bearish, because on this macro chart, I'm looking at the overall macro move, right? I'm looking on this whole thing.
And so for me, this is a pullback. For me, this is a pullback. This isn't a reversal. When I talk about the term bearish, I usually refer to reversal, not to a pullback. A pullback being bearish. I think what happens is psychology plays such a big part in the way that we view and act and react to the charts. And two really emotional words are bullish and bearish. They can make you do things if you buy into them that you might not normally do. And so when we're looking at it, we go, oh my God, we're bearish here. No, we're just pulling back. We are bullish. We are making higher highs and higher lows the entire way. The only way we become potentially bearish here is if we're like breaking down below here on this macro time frame, right? Because other than that, these are all little local pullbacks along the way. But this is the first big kind of pullback once we were up here. So as long as we're above that, this is not bearish. I mean, you can sit there and argue with me all day all you want. Do what you need to do. But I'm trying to help you understand the way in which your emotions color or cloud your view of what's going on in the charts just simply because it's a word like bullish or bearish. It really does, guys. So, these are things that I've learned over the years. And, it's the reason why I use these black and white candles and the volume's all black. Because it's very emotional. The red and green are very emotional, those colors. And so if you want to have a fight against your emotions, be able to have a little bit better pull against your emotions, do the same thing, right? Use black and white candles. Use just black or gray volume bars. Stay out of the colors over. Everybody wants to get on the colors. Like, oh, look, here's a cute little color I can use. I don't know. At the end of the day, guys, are you interested in making money or are you interested in making your charts look cute? I guess that's kind of the best way to look at it, right? But, again, go with the black and white on the candles. That itself, I'm going to be telling you, is going to make a noticeable change in the way that you view the charts. Just that little bit of a change. All right. Let me see here. Ash says, Kramer laughed, and then he says, fear and greed index at 94, though. Yeah, we're pretty high up there. Yeah, like I said, we can definitely hit this 100,000 area and pull back. And before we go up, again, then we look at maybe 90 or 80,000. But there's also that possibility we bust on out through it with a spike up higher, and then we pull back down to it, and we kind of hover, above it. We create a range above it, between maybe 110 and 100,000 or 120 and 100,000. We're building some kind of range there before we continue up higher. I really don't know which one plays out. My initial thought is always you get rejected first. That's always my initial thought. But it's not enough for me to go out there and go, oh, well, I'm definitely going to sell at 100,000, right? When we're looking at that. Let me see here. Michael, what's up, man? He says, is it normal to feel numb to all this after experiencing a bear market? Yeah, that's the best way to feel. Again, wait till you've been in like 30 years and you're across multiple markets, where you've had multiple recessions in bear markets and whatnot. And you just kind of go, okay, yeah, it's just another day. No reason to get all hype about it. You get online and you guys really need to be careful, because I know most of you spend a lot of time on social media, and most of social media is dopamine fixes. Most of it is big words and excitement, whether it's up or down, and fear, right? Fear. You see a fear. If you ever look at the post online, the fear posts get a lot more engagement, a lot more likes, a lot more shares than the positive ones. It's funny the way that works, but this is the way we are as human beings. And the more you understand, like legit understand it, where you go, okay, yeah, I see that here, and I'm going to do something about it. The easier it becomes. Now, it doesn't mean it becomes easy, but it becomes less difficult to deal with those emotions. Okay. So kind of we're looking at this, at this move up here now. We had a little bit of some sideways here, and here we go breaking out again. Again, we had a breakout, a pullback. I was thinking we might have got a bigger pullback down here.
toward that 60, 62,000 area around the S1 pivot. We didn't get it. We caught here at the daily pivot here, and then you can see we did have some hidden bullish divergence here. Lower lows on the oscillator, higher lows here on price, and that right there, and that took off. And then of course we have this gap here as well on the CME. By the way, guys, stop. If you haven't figured out yet, stop worrying about the dang CME gaps, right? There are a lot of them. Look down here. We got it down here at 27,000, right? We've got it down here at 20, it was at 20,000 and some change right there, right? I mean, and these are on the daily. Those are the two I caught real quick here, but here's one right here. Is a small one right here around 39.5. Can it pull back there? Sure. But I think if you're basing your strategy on pullbacks to the CME gap, I think you're misunderstanding how to look at the charts. Okay. And I know that's hard to do because people talk about it all the time. It seems like they've stopped talking about it as much lately, but still, right? So here's kind of where we are. I'm going to tell you what, guys, again, based on this, aggressive movement through the pivots here, generally I would look up toward the R5 pivot at least. So, by the end of this month, this pivot up here about 110.5 on the CME here, I see little to no reason why it can't hit that. Most of the time when you get this aggressive movement through your pivots, that's what you do. You hit at least the R5. You run through them. Now, it doesn't guarantee it will, but I absolutely 100% would not be the least bit as surprised if it did. If we look at the weekly, same idea on the weekly, right? We had aggressive movement through the pivots, and then we had a bit of a sideways here for a while, but now we were aggressively moving back up them again. Guess what? R5 pivot up there around 117.5. Absolutely would not be surprised in the least if we hit that. I would most often expect that more than not expect it. All right. So again, when we look at this idea of a breakout through that 100K and maybe a quick pump higher, those are some decent targets. Okay. Now, let me jump over here real quick. Now, I've posted, for those of you that aren't part of our TWC Traders Club or our All Access Pass, which gets you all our group coaching, Fibbo's Threshold Theory, and the Traders Club, right? I posted this trade this morning. We got in down here at 97.8 right here. 97,800. Stop loss right there around 97,200. And then we've got three targets here. First target's 100,729. Second target is 102,960. Third target is up there at 104,364. So right now we're currently what? We're up about, we're up 2.63% already. And so, that was down here back there at about 9 a.m. So 2.5 hours ago or so. We're going up about 1% an hour on our account, by the way. That's on our account, right? So 2.63%. If you're following proper risk management the way I teach it over at TWC, if you've got a $10,000 account, you're up $263 right now. If you've got a $100,000 account, you're up $2,630. If you got $1 million account, you're up $26,300 right now. And so, with overall targets here, 4.88, 8.6, and 10.94. So anyway, I released that this morning. That's the trade we're in. And we'll see if we can hit that third target or maybe even higher. But right now, just based on this structure here, because what I did was last night in our update, because I do updates at the end of the day, for those of you that don't know, I talked about the idea that this would be, off this swing low right here, that this is a 1, and we've got a flat correction going with a pullback to the 15-minute pivot. And so we do have 3 waves down, and then we've got, what looks like an A, B, C for W, X, and then A, B is a triangle, and C is Y. So you get 3 waves down for A, 3 waves up for B, 1, 2, 3, 4, 5, finishes your flat correction right here. If you have no idea what I'm talking about, you need to join us. You need to. Go over to group coaching, .texaswestcapital.com. Join in, $97 a month, guys. You're going to get stronger, greater, more education than you're going to get anywhere else online. You're going to go through that and you're going to look at stuff online going, holy crap, he wasn't kidding about how most of the free stuff online are half-truths or even outright lies. You'd be amazed at what you can learn in a month, much less a few months with us there. But if you have no idea what I'm talking about when I say flat correction and how I figured out the 15-minute pivot target and to get into this trade this morning, man, learn it all right in there. That's what we do. Let me see here. Do it. Don't even think about it. Join up. Worth every penny. I appreciate that, Peter. Yeah. So, I mean, he's in there with us. He knows. But, again, the clue, the thing is when you're in there, everything I do, I am bound and determined to help you become a great trader. Hopefully better than I am. I would love it if everybody that came in became better traders than I did. Why? Because one, it doesn't hurt me if you do, right? I still do great. But two, it makes me feel amazing. It makes me feel amazing when I can show somebody and they can get on and they go, holy crap, all of a sudden this makes sense. And they start making profits and they can start doing the things that they want to do. I'm fortunate enough that I figured it out, a while back. And trading's provided an amazing life for me. I want the same thing for every one of y'all out there that do trade or want to trade. Then that's where my basis of why I teach goes. It has nothing, I'm not altruistic, guys. It isn't about helping you for you. I'll be honest with you. I don't believe in altruism. But that doesn't matter because as long as I do it because it makes me feel good when you get it and you start, creating a better life for yourself, we all win, right? It doesn't matter that I didn't do it just for you. I hope y'all get that. Yeah, it would be kind of awesome if we hit 100K live here, right? What'd you say, Scott? Best group online. Where else can you earn as you learn? Yeah, that's it, right? Michael says, anytime I see someone talking about Wyckoff now without volume on their chart, just face palm. Yeah. You get to learn what it means, to really use these tools correctly. But we use all these tools so you can understand the big picture, which is how and why markets move the way they do. That's what it's all about. And again, that's where you can get stuff where, like I said last night, looking for the pullback down here toward this area. I said from this swing low to the 15-minute pivot. So that was my target area. That's what we got this morning. Because we knew we were looking at a flat here, we knew this had to be 5 waves down. That's what we got here. The only reason why I have a larger entry here instead of getting it closer down here is because I had to type it up. I had to type up the announcement there in the Traders Club there, so that everybody else knew what I was doing and print the chart and put it all together all pretty. Otherwise, would have been in way down here. Around that 97,400 or so. I would have been in right after this candle down here, but it took me a minute to get all this together and post it up there. So it is what it is, right? Let me see here. It would just be so awesome. Yeah, it would be awesome if we see 100 live stream. Yep, definitely. Ash says, as a subscriber, your words come from the essence of your character. I appreciate that, man. I appreciate that. Yeah. Again, these are people who are in here with us and they're telling you what they feel, guys. So it's not just me kind of blowing smoke up your rear end, right? They're talking, they don't have to say this. They're talking about this out of their own, I guess, kindness, right? It's nice for people to say nice things, but it's not deserving, apparently, right? So anyway, this is what we're looking for here. Again, stop loss being down here. I'll probably move that up here after the stream here in a bit. We'll get at that. But this is my local trading. This is what I'm looking at locally on Bitcoin as far as where we're going right now with the idea that it could still go higher than what those targets are. Okay. And again, still have bags, right? I still got bags from 2017 when I first came in. I bought around $1,100, $1,200. Don't touch it. Oh, but Chris, it went down from 64,000 to 15,000. So it was an investment. It's an investment. It's a long term. I don't want to think about it. That particular bag, I'm not interested in selling at the tops and buying at the bottoms. I'm interested in just holding it long term. Get that long-term capital gains tax, all that kind of fun stuff. And then just overall not worry about it for a bit, right? It's kind of like you buy NVIDIA 5 years ago and you didn't think about it. And then we got other bags, right? I've got bags from the beginning of this cycle from down around 16.5 when I was telling y'all, hey, listen, that looks like that's probably the bottom. Let's go with this. That's still here, right? And so, my trading, this is my local trading and make some money on it. Great. Worst case scenario is I get my stop loss hit. I lose 1%. That's it. But I still have my other bags that I didn't get out of that are continuing to go up with it. So I'm a real big believer, guys, in if you're going to do it, especially with Bitcoin, right? Have a bag that you just don't touch. Add to it every so often, right? Do that. Because that way, no matter the mistakes you make along the way in your trading, you're still going to have think of it as your support bag, right? People want support animals, right? They want to bring their support dog, on a flight, or their support jellyfish or whatever they have, right? This is my support bag for the markets is my Bitcoin bag there, right? Let me see here. Let me see here. What's going on, Randall? Good to see you, man. What'd you say here? Michael's asking, did you see that ETF cumulative inflows crossed the 30 billion mark yesterday? I thought they did that prior. Didn't they do that within the last week? Because I think we talked about on Beards and Bitcoin, that Wednesday show that I do with Andrew and Tillman. Maybe I'm misremembering that, but yeah, I mean, either way, they're up huge, right? It's absolutely insane. First year has just been crazy for the ETFs, for the Bitcoin ETFs. Yeah. Let me see here. Was Turbo made in America regarding possibly no capital gains tax? I'm not sure what you mean, but if you're American, if you're a U.S. citizen, doesn't matter where it was made, you have to pay capital gains tax. Yeah, because it doesn't matter where that thing is, and it matters that you're the person doing the trading or investing. So you're still going to have to pay that capital gains tax. Oh, okay, 30 billion for the week. For the week. It's crazy. I mean, it's crazy, guys. I mean, this is what I'm saying. You should have a bag of Bitcoin. I've been saying this for most of this year. I've said it many years before, but you should have a bag of Bitcoin that you just kind of have there. You don't touch, even if you're a trader. And I live by what I preach here, right? I don't know if I'll ever touch it. I like to believe I never will, but I also believe that most everybody has a what do you call it? A price, right? But as these things build up and we get other financial products on top of it, or I don't have to sell the Bitcoin, that becomes pretty interesting now. Start getting loan products and yield producing products and whatever on my Bitcoin, then that really starts looking good, right? But yeah, Randall, yeah, because if you're here in the U.S., if you're a U.S. citizen, not just here in the U.S., but if you're a U.S. citizen, no matter, and by the way, it doesn't matter where you are in the world. If you're a U.S. citizen, and you're trading this stuff, you should have to pay capital gains tax, no matter where it was created, the thing that you're trading there. Okay. But let's talk real quick here, guys, about MicroStrategy. So as you know, as I mentioned, it hit my target up here, right? This 521.50. It went up to about 543. Yeah. It came down, right? And we got this big candle here, right? If we look at the daily, huge outside bar, bearish engulfing candle here. Okay. Big spike of volume on it. Now, if you're in TWC with us, in the Trading Academy with us there, right? Again, $97 a month, guys. I warned on this candle on Wednesday. I said, it looks like we may be getting, a inverted hammer, a shooting star potentially here, spike of volume on it. So it doesn't mean it had to reverse here is what I told everybody, but I said, but we need to start watching now. And then what happened the next day? There we went. Now I sold out. Remember, this is the one I've been talking about MicroStrategy with you guys for a while here. Remember the whole idea we got a triangle going on here and everything? And I bought back over here at 125. So selling out at 521.50 is it's a good trade. However, as I mentioned online, that doesn't mean that this has to be the top. And as a matter of fact, I'm looking at it here on the hourly. That's why I showed this hourly here. This is just 3 waves down. Importantly, not only is it 3 waves down, but that third wave, if we measure out wave A here, and we measure wave C, it's between 100 and 123.6 of wave A. And that's usually the wave C target. So this to me looks like a very good likelihood this is ABC here, and we're going to go up higher. So what do we need? Well, we need to break out above wave B here at 487.93 to add confidence to this count. Now, there's a couple ways this could play out. This could be wave 4 done and complete, and we're heading up because, as you can see, based on this potential count, we got a 1, 2, 3, 4. We just about hit the 38.2 retracement. So this could be done, and we break out higher. Now, there's 2 other things that could happen. The other thing is wave 4 could be printing a flat correction. So we do something like an A, a B, and a C, and then a 1, 2, like on Bitcoin, 3, 4, 5 to finish wave 4, and then we head up. That's the same thing that happened here. We had ABC, ABC, 1, 2, 3, 4, 5. Expanded flat correction right here. So that's possibly what could be printing here as well. The third option is this could be a triangle because it is a wave 4. So that means you get 3 waves down as A, 3 waves up as B, 3 waves down as C, 3 waves up as D, 3 waves down as E. And that gives you basically a symmetrical triangle is what you guys are most often, used to looking at. Not that it'd be exactly like this, but around like this idea here. We got that low volume node right there. So those 2 things could still be happening as well. Wave 4 may not be completed. They may be printing out one of these other 2. But generally speaking, this, if we can break out above that wave B, then even if it does come back a little bit lower here, finishing off a flat correction, right? It's still corrective structure. We're still going to get up higher. So based on the height of this here, we've got an initial target, a pattern target of 687.30. All right. And so if we can get above that, that's where I'm looking minimally there. Now, I went through a big thought exercise yesterday in our Elliott Wave session. We do, for those of you that don't know, in the Trading Academy, I do a 1-hour class on Mondays where we look at Wyckoff. We look at different charts and dissect them and go through everything. How do you apply, right? Because we have the courses which teach you all the basics, everything you need to know. And then I show you how to apply it in real time with live charts. So Monday is Wyckoff. Wednesday is price action. Thursdays are Elliott Wave. And then we record all the sessions. You have access to them in every session that we've recorded. So well over 500 hours over the last few years of things that you can go looking through with the educational stuff in it. But here's the thing. Yesterday we did Elliott Wave, and I ended up spending the entire hour discussing MicroStrategy. Now, I'm not going to do it here. I've given you this right now as the next potential target up if we can get above that wave B minimum. But I think there's a case to be made for potentially a $1,750 MicroStrategy target for the cycle, for this cycle. And so, I told the guys, listen, the guys and gals, I told them, listen, I'm going to go this weekend, take some time this weekend, really kind of look at it in relation to Bitcoin and in relation to Coinbase and in relation to IBIT. and figure it out, much more clearly. But I gave them a path that would potentially lead. So, if you didn't catch the class yesterday and you're in, make sure you watch it. If you're like, holy crap, I want to see that, and that alone is worth $97 to me, hell, join, you've got access to it, right? But imagine that. Imagine MicroStrategy hitting 1750 this cycle. What does that mean for Bitcoin? Right? What does that mean for Bitcoin? That's what you got to think about. I'll give you something else to look at, guys. Okay? When you're looking at Bitcoin, take into consideration the ETFs, the Bitcoin ETFs, because they didn't start at the cycle low with Bitcoin. They didn't start, at that bear market low. They didn't start prior to that, years prior to that, right? Look at MicroStrategy. Look at Coinbase. None of these started where Bitcoin started, right? But they all need to generally be expected to top out around the same place, right? So you have to figure out, well, how do I get where I'm trying to get? How do I kind of figure out what's going on with Bitcoin? Well, you're going to have to bring that other stuff in there. And all of a sudden, some of these crazy targets don't look as crazy. I'm not saying it has to go to 700,000. I'm not saying that. Or even a 300,000 Bitcoin. But all of a sudden, there becomes pathways to get there based on these, and also look at the miners, different miners, right? If you're Bitcoin adjacent, Bitcoin-centric, companies, what's the closest thing to spot Bitcoin? I mean, other than like futures, right? It's Bitcoin ETFs. Beyond that, you're taking a further step away from Bitcoin if you get into MicroStrategy, right? It's a little bit more removed because they have a core business, which obviously isn't Bitcoin. But they are so heavily invested into Bitcoin that people who are buying MicroStrategy now probably don't know a damn thing about their core business. They're buying them because they're buying Bitcoin. So that'd be the next one out, right? But then you get beyond that and you start looking at the miners, right? Well, the miners, people always ask, well, Bitcoin's flying. Why aren't the miners doing something? Well, the miners aren't Bitcoin. They mine Bitcoin, but they're companies. They have other things, right? With Bitcoin, you don't have to worry about your cost of electricity, and your cost of equipment and all these other things, right? And you're paying out to shareholders. You don't worry about all that. So as you get further away, you get more into the, it's not just really Bitcoin. It's a company that deals with Bitcoin. And the further removed it is from actually holding that Bitcoin, right? The less in lockstep it's going to be with Bitcoin's movement. Coinbase, think of Coinbase. Coinbase is like the general store back in the 1800s when we had people going to mine gold. They went out to California to mine gold, right? Coinbase, well, you're out here trying to trade for digital gold, right? For Bitcoin. Coinbase is basically is the shop, right? They're selling you the way to do it. They're selling you the pickaxes. They're selling you the jeans that you wear. They're selling you, all those things. So they're not Bitcoin. They're that company that helps you get into Bitcoin, right? So again, you're kind of getting a little bit further off. But even within miners, the miners that are taking more of the MicroStrategy approach are gonna move probably, should move more closer to Bitcoin's movements. So when you think about who does that, Mara does that, right? As opposed to the Bitcoin miners that don't do that. Because again, people start buying you because you're holding Bitcoin, not so much your core business. And if they're buying you more because you're buying Bitcoin and holding Bitcoin, and you're starting to, hold up a significant level of that, then it stands to reason that they're more likely going to mimic Bitcoin's movement. Because the people coming in aren't so much worried about all those other pieces of the business. Does that make sense? Brian says Coinbase is the Sears catalog. There you go. Let me see here.
Randall says, I was on the impression that the Trump administration was not going to exercise capital gains tax on products made in the U.S., such as XRP, Cardano, Algo, et cetera. Oh, I see what you're talking about. It's something they floated around. Something they're talking about is maybe not, is maybe making it tax-free, I think is what they said. If the company produces the coin, the crypto. Yeah. They did say that is something they're looking at. Now, there's no guarantees, and they didn't say it's a definitive, right? It's definitely going to happen. But the way I would understand that is that we could trade them without being taxed on, which would be absolutely amazing, right? All of a sudden, you'd see all these shit coins start being, much more than already there on these U.S. centric exchanges. Yeah. Ash with the question here. If you had no option to diversify and were allowed to invest in only one asset, you put those in big letters, one. Which one would it be? Bitcoin self-custody, ETFs, miners, MicroStrategy, or, again, this is going to depend on who you are and where you are at in terms of your life and your goals financially, and wealth-wise, your risk tolerance, all this kind of stuff. For me, I'm a big self-custody Bitcoin holder. And so, again, if I'm looking at derivative products off that, I do believe we get them with spot Bitcoin. We got the options product there coming out. We'll have other options products and other things coming out on Bitcoin itself, which may show up on the Bitcoin ETFs first. But for me, I'm old school when it comes to crypto here, and I much rather prefer Bitcoin self-custody. But here's the thing. We've been talking about it, Andrew, myself, and Tillman there on Bitcoin and Beards on Wednesdays there, about this idea that, if you're in it now, you're probably very much about self-custody. But those coming, as we continue further into the future here, are going to be less and less interested in self-custody and more interested, because they don't want to have to worry about it. They don't want to have to be their own bank. They don't want to have to worry about their security. People don't want to do that generally, guys. And so on top of that, they're going to be incentivized not to do that, right? Your banks are going to be able to hold it, or your wealth manager, right? And then there's going to be derivative products and financial products based on, the bank, BNY Mellon or something like that, right? Holding your crypto. You'll have insurance products. You'll have loan products. You'll have all these things. You'll have yield. You'll be producing yield on it, right? All these things you'll be able to do, and you don't have to worry about it. So, for me, I'm very much in the self-custody, but I also understand that most people coming in here on out are likely going to be very much less interested in that, and very much more interested in not having to worry about holding their wallet and, sending it to the wrong address and all these things we're still kind of fearful about every time we send, right? I don't know about y'all, but I always send a little test first just to make sure I didn't screw up the address, even copying and pasting. I'm the guy that I'll go lock the door and then I'll try it 2 or 3 times to make sure it's definitely locked, So yeah, but that's the reality, right? A lot of people get in with Bitcoin and then they get upset. Oh, they're doing this. Oh, this stuff's coming. Well, guys, at the end of the day, if you want the adoption that you say you want, these other things are necessarily going to happen. How do we know? Because it has happened every time throughout financial history. Hundreds and thousands of years. Right? This is the way it goes. This is the way it ends up. So I'm not saying, oh, I prefer this, or I want this, or I don't want this, or anything. I'm just saying this is life. This is what happens. And so the more you understand about that, the better positioned you can make yourself as price continues to appreciate. Okay? Yeah, Fiboswani was going to try and be with me today, but he had a meeting in the office that he actually had to go to. He's got like a real job, he does. He's going to try and be back here in a few weeks, guys. By the way, real quick here, I won't have Beards and Bitcoin show next week. next Wednesday. We won't have one. We'll be back the following Wednesday. And then I won't have this Friday show next Friday. I'm going to be with family doing Thanksgiving stuff, Wednesday, Thursday, and Friday. But you can catch me on Crypto Burb, the Burb's Nest. They're doing, their yearly trading Congress thing. And I'll be one of the traders speaking with that. And I'll be doing that at 10 a.m. Central, 11 a.m. Eastern next Wednesday, the 27th? Yeah, the 27th. And it'll be on YouTube. I posted the link on X, and I'll try to get it posted across the other social media sites in case you're following me elsewhere, if you guys want to catch that. The subject for that, by the way, let me see here. It's a mouthful. I'll tell you what it is here. Let me see here. Yeah, the 27th here. The topic here that I'm going to be talking about is the power of context in trading, integrating liquidity, pivot points, and market psychology for better decision making. So that's what I'm going to do and be a part of next Wednesday, so you guys can still catch that. And then, like I said, the following week, the first week of December, we'll be back with Beards and Bitcoin on Wednesday, and then this market breakdown show on Friday. And Fibbo's going to try and be there on that Friday. So we'll see. We'll see. Okay. Let me see here. Yeah, Peter says, if you have the means, self-custody. I'm a big believer in it. I'm a big believer in things that you do. Try to learn a bit about it. And usually the best way you can learn a bit about it is by actually doing it, right? So, yeah. Let me see here. So that's what I'm thinking there. Let me see here. Where are we at right here? Oh, yeah, we almost hitting that new all-time high here on Coinbase. Where are we at? All-time high on Coinbase, 99,543. We're hitting 498 so far on this move up. So we'll see how we continue to do that. Oh, I wanted to talk real quick here about the DXY. I don't remember. I don't think I told you guys about this. I've changed it. I've got the new count in. Where are we at? That's what I'm looking for. And so I think we finally got it figured out what's going on here. So I've got this as, either a 1 or an A here, but it's 3 waves down here and then a triangle for 4. And then we get a thrust down for 5. And then we have A, B, C here as a flat correction. So that may or may not be completed at a 107,650 target. It's spiked up there to 106,924. We're looking for a breakdown below 106.113. If we can get through that, that'll suggest that wave 2 or wave A, B, B here may be complete. Further breakdown through 103,373 is going to add confidence to that and suggest that we're headed down now on that. So that's what I think's going on here. Finally, we got some clarity here. This thing's been going sideways for about a year and a half here. And what does that mean? That means if you're looking at the euro, if you want to get long the euro against the dollar, it may just about be your time here. Let me pull this up here. Come on, pull it up. It's just basically the opposite of the DXY. Here you go. 1, 2, 3, 4 is a triangle. 5 is the thrust up. And then again, that completed 1 or A. Then we have A, B, C here. Potential bullish divergence printing here on the daily. Support at the S3 pivot on that daily there. Right into this liquidity down here and this wick back on November 30th of 2022. So looking for that to rally back up now. And that should get you a nice move up. Quite a rally up higher after that. Especially if this is going to be 1, 2, and 3 rather than A, B, and C. But even if it's C, it's still going to be a huge move up. So if you're looking to do that, you should look at that, right? But I love the count. It finally makes sense. We've been kind of struggling over it as we've been doing this over the last year and a half, trying to figure out a couple of different options, what it could be. But looks pretty clean as 3 down, 3 up, and then moving down here with 5 coming down here, completing that flat correction. So yeah, so you've been watching that. Great. Gold. You see here, gold. Which chart am I looking at? No, that's gold Bitcoin. That's why. Okay. Oh, I'm looking at GC. That's right. I want the futures. Come on. So we had initial target area of the yellow zone here, secondary target of the daily pivot. We're looking for that potential reversal here because so far this pullback is only 23.6. Now, what does that mean? So here's the possibility. If we're breaking out through this daily pivot at 23.70, that could mean that wave 4, again, like I spoke about on the other chart, right, on MicroStrategy, we could be doing 3 waves down, 3 waves up, 5 waves back down as a flat to finish wave 4. We could also be doing a triangle, A, B, C, D, E, and do that, right? If we can get rejected by this daily pivot, though, and move on down, especially through 26.21 and 90 cents, then that'll suggest we've got kind of this 38.2 target down here around 23.7780. But with this base here, there's a good chance we could be doing a flat or we could be doing a triangle here before we break out. Based on the height of this, based on this height right here, that would potentially give us a 29.75 target on gold. But we've been long since down here, looking for this rally up here, and now I'm looking for a reason to reverse. There's not a lot of times that I just automatically sell at a target. Most of the time, I'll sell a little bit short, or I'll look for a reason that is going to give me, look for some reversal on some shorter time frame to maybe suggest that that target is legit and we're done there and it's not going to go up any higher. Okay. Let me see here. Let me kind of catch it. If MicroStrategy, the company, pulls off the Bitcoin refinery thesis and starts to take over the 300 billion convert bond market, would it still be beholden to a charting process? Yeah. So especially if you're talking about Elliott wave, which is, projecting targets. Yeah, definitely. Because when it comes to Elliott wave, the thing you learn is there are rules and there are guidelines, and your targets, like wave 3 has a minimum expected target of 1.618 times wave 1, right? Or 168.1%. Well, that is a guideline, right? It doesn't have to do that. It's just most of the time that's generally where it gets. So that's our starting point. After that, we look at the 200, we look at the 2618, 3618, 4618. So in your question there, what you end up getting potentially with something like that would be this idea that the target would overextend, which means you're printing more waves in, between it. So you're printing like interior wave sets, which are then overextending the larger wave set. But yeah, you can definitely keep up with it with charting for sure. Especially using Elliott wave. Other than that, you're using Wyckoff and Wyckoff for accumulation and distribution along the way. One of the things I teach is using point and figure. There's 2 ways to use point and figure. There's the way that most people are taught, and then there's the way that Wyckoff used it. Okay. And so I teach that as well. And that helps you project targets as well. So you don't just have to use Elliott wave, you can use that. But in order to do that, you have to understand Wyckoff and what is actually, accumulation distribution. But you can apply that then to point and figure chart and project targets as well. And other than that, if you're using price action, again, you can look at, fair value gaps and low volume nodes, and you can look at pivots, to kind of give you targets and movement as well. So yeah, however you want to look at it, just because it may go crazy all of a sudden doesn't mean that all of a sudden things stop working. They do work. They continue to work. What you normally see online, though, are people that don't understand what they're doing. They haven't really learned how to use the tools or the processes that they're showing you. And so then they get really
their ideas, and are really obscene. And then people go, oh, Elliott wave doesn't work, or Wyckoff doesn't work, or price action doesn't work, or pivots don't work. Well, no, they all work if you apply them properly, right? That's the goal. And that's what we spend a lot of time talking about, in the Trading Academy, because, the other thing we do a lot in there is we teach you how do you approach the market, right? Just because you know how to do Elliott wave or Wyckoff doesn't mean you're approaching the market correctly at the time. How should you be approaching it if you're looking to trade? Because it's one thing to know how to do these things. It's another thing to actually trade with them, right? So most people, when you go out there and you're learning how, whatever their system or whatever they're trying to teach, they're just teaching you the system, the thing itself, right? They don't actually teach you, well, on this particular instance, I would approach a trade like this because of this, this, and this. In this instance, I would approach it this way instead because this is not the same as that, right? We're doing something different here. And so a lot of times you guys, you'll buy courses on trading and be like, oh, it doesn't work. And of course, probably works a lot of times, right? But nobody's taught you how do you actually approach the market with that. You can't just blindly throw it on there, right? There are some mechanical systems where you can be more blind about throwing it on there. But for most things, you have to understand, well, why should I be approaching it this way or that way, or how should I be doing that? Does that make sense? Yeah. So, whoever you're going to learn from, guys, even if it's not us, and you're crazy if you're not coming to us, I'm telling you guys, $97 a month is absolutely insane for everything you get. But like Peter said, you earn while you learn, right? Because you get access to the Traders Club, which are all our trades, mine, Fibbo's, Andrew's, and Vince's trades all in there. Right. But, even if you go somebody else, just make sure you're keeping these things I'm talking about in mind, because if they're not teaching you these things, then it's most likely going to end up being a waste of your money. If they're not teaching you proper risk management, if they're like, hey, listen, you need to go 10x leverage on this or 50x leverage on this or something, you don't have to, guys. I show you day in, day out how to trade successfully over and over and over again and make real money without using leverage, without using oversized position, which is what most of retail traders, it's what I did when I first came in, what y'all do when you first come in, right? Oversized positions, use ridiculous leverage, not understanding the proper risk management, which is what's going to save your butt when you're wrong, because especially in the beginning, you're going to be wrong a lot, right? Let me see here. Hey, what'd you say, Brian? I'm interested in a strategic Litecoin reserve. Somebody was asking about Litecoin. Let me pull that up, and then I'm going to get out of here, guys. Let me see here. Where's my last chart there? Right here. Yeah, so here's the big monthly chart. Again, still nothing's changed on me for this right here. Based on the height of this, we would have a target up here of 24.86, but we don't have to reach that. All we need are 5 waves up that break out above this swing high here at 413.46. That's all we need. But as you can see on the monthly here, cross bullishly, hanging out around neutral, cross bullishly there. I mean, it looks good. Based on this 1-2 idea here, wave 3, minimum expected target at 128.19. Potential secondary target at 154. But again, like we've seen some of these other ones do, this thing could just like rocket off all of a sudden. So you got to be ready for that, right? So yeah, Litecoin, that's kind of where I'm at with that. Here's the weekly look here. Yeah, see, I've got a leading diagonal here, like an ABC 1, 2, ABC 3, 4, ABC 5. And we got this move up here, headed up higher. Some good volume, really good volume on this move here, but we need to now break out and close above it to nullify the control this candle has. Because you got a big spike of volume toward the top. But I think it may have just probably like cleared the way here for this to move up higher. Daily is about to reset down there. We've got 3 waves down. So again, like we've been talking about, if you break out above this second wave here,
at about 94.714, we should be looking to get up higher. So, I mean, locally, based on the height of that, you get a 110.62 target, 110.62. But I think, let me see here. How far is that pullback there? It's almost a 50% pullback. 1, 2, 3, 4. That could be 5 there. But again, you could get 3 down, 3 up, and then 5 more down to get a flat here before it takes off. But it does look like we've got 1, 2, 3, 4, and 5 waves up. So we'll see what it does here. Does it, rally up and then pull back for a flat, or, is this done here a little bit short, shy of that 50%? Because we're that short of it, I'm kind of iffy about it. So I'm really kind of keeping an open mind as to maybe we get a flat correction here and pull back. But overall, that's kind of where we're looking at with it. All right. So anyway, I'm going to get out of here, guys. Do me a favor, hit the thumbs up, hit the like, leave a comment, follow, all those fun things. Join us. Again, you can join us there at group coaching, the number 1.texaswestcapital.com. We'd love to have you in there. Like, even if you're just there for a month, you're going to learn more in a month and correct a lot of the things that you're maybe doing wrong right now within that month. Even if that was all you wanted to be was for a month and check it out. As well as, of course, having access to the TWC Traders Club. Lots of winning trades in there. I think Fibbo himself is up over 250% or something over the last 2 months with the trades he's been posting in there that you get to jump right in and trade with. So, yeah. Anyway, as always, remember, the only thing you control is how much you lose. So please keep working on that risk management. I'm going to head over to Gary Cardone's YouTube channel there, and we'll see if they're still live. And if they are, maybe I'll jump on there and discuss a few things with him and see what kind of questions he has and things he wants to talk about. But other than that, by the way, if you do join, say hi in the forum areas. Say hi. Our members are some of the freaking kindest, most helpful people you'll ever find. They love when new people join. They don't judge anybody. Many of them have been with us for years and years and years, and they continue to choose to be with us, even when we were selling for $4,000 a year for our group coaching alone. So, yeah, there you go. All right. Y'all have a great weekend. Trade safe. And like I said, remember, the only thing you control is how much you lose. It's absolutely it. So you got to make sure that you're spending most of your time understanding and perfecting and using proper risk management. So that way, as you learn to trade, you'll still have money left to be able to trade, right? All right. Y'all take care. We'll see you in 2 weeks. Unless, of course, you join TWC, then we'll see you there today. Take care, everybody.